Hey home buyers and sellers, are you curious about today's mortgage rates? Well, you're not alone. Let's dive into the key questions that are on everybody's mind. Why are mortgage rates so high? Well, to understand this, we need to look at the 30-year fixed rate mortgage and its connection to mortgage-backed securities. Mortgage-backed securities, or MBS, are investment products that are backed by home loans and real estate debt. When investors buy MBS, essentially they're lending money directly to the homebuyers. The demand for MBS affects the spread between the 10-year Treasury Yield and the 30-year fixed-rate mortgage. Typically, this spread is around 1.72%, but right now it's much higher. In fact, the spread is currently almost 1.5% over the norm. These levels are usually seen during periods of high inflation or economic volatility. The only times the spread approached or exceeded 300 basis points were during these same times of high inflation and economic volatility, like those that were seen during the 1980s or the Great Financial Crisis of 2008 and 9. Here's the good news. Historical data shows that the spread trends to come down after each peak, creating room for mortgage rates to improve. Now, let's find out what's causing this larger spread and high mortgage rates today. The demand for MBS is influenced by various factors such as inflation, potential recession, interest rate hikes by the Fed, negative narratives about home prices, and more. When there's less risk associated with MBS, the demand is high, mortgage rates are lower. Conversely, higher risk leads to lower demand and higher mortgage rates. Currently, the demand for MBS is low, hence the high rates. Next question, when will rates go back down? Well, it's reasonable to assume that the spread and therefore the mortgage rates will retreat in the second half of the year if the Fed takes its foot off that monetary tightening pedal and provides investors with more certainty. However, it's unlikely that the spread will return to its historical average of 170 basis points if some risks are here to stay. So while we expect the spread to shrink, mortgage rates to moderate as the year progresses, it's important to remember that predicting mortgage rates is challenging and uncertainties do exist. So there you have it. That's what's going on with mortgage rates right now, and that's why it's so important to understand what's going on. My name is Daniel Abreu, and I'm the team leader of the Abreu Group out of Realty One Group Advantage. Call us if you have any questions. Please remember to like and share.